Welcome back. Very interesting to have you this morning. And once again, welcome back. We've just had the weather update and traffic update, and we hope that it's moving on quite okay as we speak right now. And as you await that, as you move on to your workplace, in studio this morning, we are joined by Monicah Wamuchiru. She is a finance and tax lead consultant at Big Leaf Solutions. With an experience of over 5 years, she's here to educate you specifically and giving us insights or giving us recommendations on how we are going to go about our business. And you know, 5 years experience is not a small thing, is not a short time. If you think about it, 5 years in business, advising people, talking to experts, there is a huge connection. So she has a lot for us this morning to tell us this morning. Monicah, thank you so much for joining us this morning on the broadcast. How are you doing?
I'm doing fine. Thank you so much for having me.
How is your morning?
Great. I'm excited.
Tell us about what you do at Big Leaf.
I just help people, giving them the best finance, accounting, tax advice I can possibly give. Ensuring that their finance processes are efficient, so that they can focus on the key thing, which is the top lines, the revenues, and ensuring that their businesses run smoothly, get maximum synergy from their tax policies and tax practices, and of course ensure compliance. We don't want our clients to be non-compliant. We want them to be compliant, but at the same time maximum tax benefits that can accrue to them. So that's what I do. I interact a lot with business owners, and I'm happy to be here.
Do you also interact with people who have ideas? You know, they're business owners and they're people who have ideas of business.
Yeah, I interact with them a lot. I see people with big dreams, big visions, big plans, and my goal is usually to help them realize, see it come to life. And when I see that happening, that's my joy. So in the best way possible, I can advise on best finance. I can show them the best people, the best ways to get financing that's accessible, cost effective for them. And having also been involved in running a business, I think I know the pitfalls a bit, so I can tell them, avoid this. I think there's a better way. So especially when you're starting, sometimes you can be so engrossed in let's go this way. Sometimes you need somebody to ground you, so that you don't mess up. It's early stage, so you really take care of it until the business has roots and can be stable and can withstand economic factors, both internal and external. So that's my goal. That's my job. I love it. Yeah.
You said you love your job. What's so interesting about meeting new people, meeting new business people? What is the something that you enjoy most in your line of business?
You realize opportunities are endless, because you meet one person is thinking about you can revolutionize agribusiness in this way, and then you meet the next day someone with a crazy idea in tech, the other day somebody with a crazy idea in another industry, and you realize, wow, if all these things are to come to pass, I don't know, I think 5 years from now it will be an entirely different world. So in my space, because I meet so many people with so many different things, I realize that opportunities are endless. So you're bombarded by,
so many people, ideas.
Yeah. And all of them seem workable. You just have to have the timing right personnel, the right revenue, the right market. It's
Before we get into that, because I know our viewers are really waiting for that conversation. They're really waiting to know how they can get funding. That's the elephant in the room.
Yeah.
Before we get into that, let's talk about the U.S. fund cut, the temporary freeze.
Yeah.
I understand that there was a 90-day reprieve to allow a number of sectors to continue receiving funding. But as of today, about 33 million worth projects have been stopped. That's on grants and funding. So how has this impacted us so far?
Well, of course, apart from the obvious job losses, job cuts, which are actually, I think, the number they're giving, 40,000, that's just the tipping of the iceberg. That's like direct, but the indirect is probably worse. The indirect job losses, so many people will lose their spending power. So everybody else that was feeding off that loop of, say, a person X who was employed and had a certain disposable income, and now they've lost it. So everybody else was feeding off that loop, that cycle. It's been cut. So there's a bigger indirect impact in terms of loss of spending capacity for so many people. So apart from that, what I'd think about it like very critically and say that it's like two sides of a coin. Yeah, it's a problem, and what I'd ask what if I was in government, this is what I'd do. I'd probably sit down and reevaluate my spending, prioritize, say, healthcare and education, especially those emergency aid lines that the USAID was taking care of. Really eliminate the things that are not primary to human needs. But that requires a lot of political goodwill, again, which I don't know if we have here in Kenya. But also I'd rethink my strategy in terms of how we structure aid and grant proposals. So for example, you need to be able to cover yourself for a financial year. I was thinking about it, and those countries, they don't just give us foreign aid, they also have interests. There's a reason they give us foreign aid, because they have their interests here, and you can use those interests as leverage to make sure that you're not so adversely affected, in the sense of try and protect yourself from sudden budget cuts. Because this came in, Trump was sworn in 3 weeks ago. A month is not even over.
Yeah, and the world is shaking.
Yeah. So USAID, it's like it's been closed down. But I don't think they will close it permanently. What I think what they're trying to do is also, and they're justified to do it, they're trying to also cut wastage on their end, because they also have economic issues in their country. So he's right to do it. If you look at their side, he's right to do it. It's just that on our end we are really suffering. What should happen is whether they restructure or they form a new body, we should also be careful when we are looking at these grant contracts, grant proposals that we get, to be able to protect ourselves from sudden budget cuts that really cripple, like in a week. It's crippling.
Do you think Kenya has the capacity to hold this? Because first we are having youths on streets who are on protest. They say they have all the time to do their protest. They're complaining of lack of jobs. We have people who have lost their jobs. You said 40,000 is just the bare minimum. There's much more. The country is yet to find solutions for the youths who are even graduating and lacking jobs. And then there's this cohort who have also lost their jobs. Do you think Kenya has the ability to withstand this?
Right now, there's going to be massive bad things happening, because I listened to yesterday in the news. There was a speech from the Ministry of Health, and she was trying to explain how many people will suffer because aid has been cut in this and this and this and this.
58,000. She's saying around 58,000 new cases will be reported of HIV by 2030.
So you see, that's like a grim prediction. And then they said that they're trying to find funding that will cover that. Already that shows that we cannot cover that gap. internally, so they have to look for sources outside, which now is like a lot of pressure, I think, for Treasury. That's why I'm insisting, since we are not going towards the budget making, it's just in June, July, right? It's just a few months. Like, this is it's a problem, but it presents a perfect opportunity to get our budgeting right. Okay? Since we have at least 3 months to really interrogate our spending lines. You know, our budget is not what you see. You know, we just get the total figures, yeah. But that budget book is like how many? Like 10,000 pages, really. Now, when you dig into line by line of that budget book, that's why the devil is in the details. Okay, that's where you will realize, oh, by the way, we can cut half of hospitality, which goes to around. When you add up, it's ludicrous amounts of. We can cut on travel, we can cut on fuel, we can cut on but but the will is not there, the political will to do it, because it can be done. I mean, it only takes, I think, an executive order to all government agencies, including counties, just telling them to interrogate you know, some certain budget lines, probably cut them by a certain percent, and you will see that suddenly there will be cash for things like ARVs, things like Kakuma, Dadaab, what you were talking about, because I know Kakuma and Dadaab they run on US aid, by the way. They run on US aid. So places like those, now you wonder how they'll run for the next 3 months if other donors don't come up. You see, again, we're going back to the same problem, other donors. Instead of finding, the problem with donors is it's not sustainable on any level, because they can change their interests. So before President Donald Trump came in, the interests were different. It was more of a geopolitical control, political interests in the US military interests. Now it's something else. The interests have changed. They want economic development for the US, not for Kenya, not for Africa, not for Europe. It's for them. And so when you look at that change in interest for the US and the administration right now there, you realize that it's going to be there. But I think there'll be more cuts. I don't mean to be pessimistic, but I think if Europe follows the same trend as the US, then we are going to be in a lot of trouble.
It's sad, because the other day the UK were holding strikes, and the complaint was that Kenya is receiving so much funding.
Yeah.
And you see, it's quite unfortunate. You've talked about budgetary adjustments and fiscal spending prioritization.
Yeah.
It is something that we as the people see that this can be done, but our political class does not see this. So is it that they can't? Because if I look at it, there are other nations who have succeeded. There are other nations who manage their healthcare systems. Do you think we have policy problems, or it's just a leadership problem?
No, it's not a policy problem. We have too many policies. They're there, but there's an interesting quote, not a quote. I just read somebody had tweeted something. He said, projects in Kenya are evaluated on the basis of what we wish them to accomplish rather than what they actually accomplish. So like when we are launching, we are all pomp and we want this vision to, okay, I'm not saying vision 2030, okay, we're not yet at vision 2030, so let me not pass a judgment on that. But when we are launching a project, it's a lot of, it's going to do this, these are the predictions, we expect to build, we plan to build, we will do this. But then projects, especially public government projects, should be measured on actual achievements, okay, I have said this is a deliverable, it's been achieved, case closed. Okay, if we had planned this, if it has not happened, then that project is a flop.
I think Kenya, we just have a problem with celebrating wins before they actually happen. We've seen it in politics, right? We are celebrating his victory before he actually wins. We see it on projects. We are celebrating a road before it's actually built.
So we are more on the launching than the opening of a built road. I'd rather call the political leaders when the road has been built, then come and open it. Don't come and launch a groundbreaking. No, come and launch a built road.
And that is on spending prioritization. We prioritize on things that don't actually help instead of things that actually help. So before we shift to funding, so you actually believe that it is possible in Kenya. 100%. We just have to make our priorities right.
Yeah, and I don't know if I don't know why there's no political goodwill, because it is so easy. It is so easy to just get every government department to downsize on non-critical spending. It is so easy. You simply do not pass the budget, because budget making process starts with them. So they make the budget in a panda with levels. So by the time it gets to treasury, it's gone through those stages at the county level. If it's a government parastatal, the budget originated from the parastatal. So at that level, you can control the outcome. Okay, so it's easy to exercise political power and just say that by this time, if your budget on sitting allowance or hospitality, there's like a major budget line on hospitality. By the way, if you read the budget books, it's like really big, or other logistics, or they're crazy lines. So you can say across the board, we are all cutting that by 50%. Across the board, counties.
It's going to be a fight with the SRC. Because SRC, you know, these days SRC is just like a barking dog. Watasema, the car, we do not have the budget for that, but still MPs will want a 50,000 sitting allowance while doing their job actually.
Yeah.
So and the salary raises are necessary, if you ask me, because if it were nafanyia, let's not talk about how they raise their salaries.
That's like...
Now let's move to this very interesting side of our conversation this morning on business funding. And this cuts across whether it's a business that is starting up or someone who has already set up the business. What do you think is the biggest barrier to these businesses getting funding?
Wow, that's a big question. The biggest barrier, accessibility. Accessibility. Because the costs most can bear. Right? The costs most can bear. Because you're in a business, you're generating cash. So cost of capital, most can bear. But accessibility and availability, most do not know where or how to get it.
Is it tied to procedures of getting the loans?
Yeah, so sometimes too much red tape. Sometimes you have to really justify your business. Most times, especially in the formal sector, that's banks, their risk appetite for loans to entrepreneurs is very low, meaning that their lending model does not allow for risky moves. So they will try their best to prove to themselves that the chances of this business paying back is almost 100%, which is hard. Okay,
very hard.
So they'll ask you for an endless amount of debt. They'll ask you for financial statements. First, you're an entrepreneur. You're new. You do not have financial statements. You know, audited accounts how can you have audited accounts?
Really,
You're new in the
through
business. Yeah, you, like legit, you're new. You've probably been in business for a few months. They want collateral. So that means assets. And for most entrepreneurs, no assets.
Especially the young ones.
Especially the young ones. So most of these guys just have a skill or
an idea.
And the skill has not yet, no, they're trying to monetize the skill. That's why they kind of need the financial backing to be able to fully monetize it so that they can see the fruit. But the bank wants the fruit first, to see the fruit, and then they give you capital. Actually, it's very easy for a business that has been in operation for many years and has been making profit. Actually, the banks will even call you and tell you, hey, hi, you qualify for a loan of this amount. Would you like? It's almost like being shoved into your mouth. And like
it's like they're into business. For them, it's not about helping you. For them, it's how are we benefiting?
Exactly. But then again, rationally speaking, they are a business. Again, I always go back to interests. What is their interest? They want to make money off of interests. What is your interest? You're trying to either establish yourself, and at that point, the bank's interest and your interests don't align. So you become stuck. So that's the problem now. That basically summarizes it, why you will never like same eye to eye with the bank, and how comes you will never ever get any money from the bank, especially startups. But thank God there are other avenues. Yeah.
But there seem to be so many inaccessibility challenges towards getting bank loans and bank funding. So people tend to shift to unregulated lending. Do you think this has had a very big impact in terms of risks and everything that is concerned?
Yeah, so the problem with unregulated lending is the cost. So you find it's basically Shylocks, okay? And they will harass you the moment you do not pay. They will really harass you very badly. And the penalty for late payment is also very high. You can pay double. So if you got, say, 50K, you might actually find that you're paying 100K in repayment. And that is a lot of mental and emotional trauma that they have pulled you through. So I would never, that's like digging a hole for yourself. The more you dig, the more you go deeper. So unregulated lenders, no.
Do you think the government should regulate them?
100%. Yes, 100%. Even at least of late, I saw that the government decided to get them off CRB. So if money lending apps, if you had previously, they would list you on CRB for defaulting. Now that affects your credit rating now, even in the formal sector. But at least right now, they're not you're off the CRB list. So at least in future, the banks will not have a very bad credit rate. So I don't. That is like the last of the last resort. That is when you're sure that you can get the money back on time. Yeah, on time. Yeah.
So unless you're sure, don't dig the door for yourself.
Don't go there. And I wouldn't advise that for businesses at all, even for personal finance at all, because, again, it is not sustainable. It is not sustainable.
Okay, sure.
Yeah.
Now, data shows that most venture capitalists focus on agribusiness ideas, tech, and these big sectors or ventures. Do you think this is like a barrier, or why are they really venturing into these sectors?
I think because of the potential for growth. Yeah. The potential for growth for tech currently with AI, it's like going that direction. So if you have any innovation in that line, there's a possibility for very high growth. Again, agribusiness, So there are two things that really don't go away. Rather, tech is accelerating, and then agribusiness can never really go away because it serves something that you cannot take away, food. So you can't like say we can replace food with something else. No. So food, I read somewhere that the one thing that AI will not replace
It's food.
is trading in food. So it's trading, e.g. food. So really by 100%, at least that's the one thing you're sure that AI will not take, will not, it will make it more efficient, but it will not obliterate it. There's some industries that will be obliterated completely. So I think also VCs are seeing that, they're able to predict that, so that's why they are also, if they get into plans for and agreements for 5 years, 10 years, 3 years, so they also have to align with how it's going in the global market, how tech is advancing, so that they also ensure they protect their investment. I think that's the main reason why they're going to fintech, tech, agribusiness, and sustainability.
Before we, sorry for cutting you short, before we began this conversation, I was asking you about, you were talking about Africa having a pre-decented challenge of you have to show your fruits before. Why is it so much in Africa than in other countries like California or just other states?
Well, the African market and the business environment is a lot tougher than there. Obviously, because the market is more advanced. Here, I think we're still taking baby steps. So even the investors are not sure about this market very much. They know there's great potential. We all know Africa is the future. We all keep saying that. So yeah, they know that, but it has, they need proof. There, like in Silicon Valley, it's already proven. So we can list so many farms that have come off Silicon Valley and they're doing great. But here, first, we see first of all a bad trend with startups getting funding and then trying to scale a bit too fast and then dying off suddenly. There has been that bad trend. So people are starting, okay, so there's the conservative nature of, then I need you to prove that your business model or your product is actually
not to that fight.
It's viable and it can sell. Can you sell it? How many units are you selling in a month, in a year? How much is the profit margin on a unit and in total? So what are your operational costs? Because at the end of the day, they also want to make money. So in Africa, you first have to prove yourself. But because the environment is tougher and we've not yet been proven very 100%. But there, they have gone through the learning cycle already. They know. So there, if the idea seems viable, they can predict with a certain level of confidence that this idea is viable, so let's go ahead, or this idea is not viable, so let's halt.
They can even help you with developing
But here, you still cannot predict with, you can come up with a 2050 idea. You know, like those are some of the challenges now, especially in tech. So you come up with an app, but you're like, what is the revenue model for this app? How are you going, what problem is it solving in the African Kenyan society? Is Monicah going to buy it? You know, but normal guys like us, am I going to buy it? How am I going to be able, am I willing to subscribe to this app? You know, most of us are like, this app for free. You know, you all want free apps and something like that. So by the time I am comfortable, is this market open to guys subscribing on apps? Is it a thing? You know, there's also consumer trends, and so if I'm making an app, what is the revenue? Is it advertising? And in terms of advice, will I be like, skip? So there's also that. So those are the challenges that tech guys, fintech guys,
go through.
Yeah,
and it looks like we have a lot of challenges as a country because the local Monanchi is struggling to get loans, domestic loans, and our government is also struggling to get the same loans. Like, whether unaenda KCB kuchukua loan, Treasury pia inaenda hapo kuchukua loan. So what do you think this has affected our lending as a country?
It has really affected, actually. So I was reading a report, yeah? So the government will borrow in form of bonds, bills. So over 50% of the subscribed bonds and bills are bank financial assets. So banks are the ones who lend the government any money, any money that comes to the government in form of borrowing through bills and bonds locally. Actually close to 60% is from banks. So how do banks first of all get money? It's you, some other guy, we put our savings in the bank, right? Our deposits in the bank. But because I'm not withdrawing daily, right? So the bank has a leeway to use my money to make money for itself, okay? But still balancing that liquidity and investing. So it will take my money, give it to government as a loan, okay? Obviously, government loans are considered low risk. Not like me, whose business is unpredictable. My business, the risk is very high. There's a chance I might not pay. But a treasury bill or a bond the bank will consider it a safer investment. And like the returns right now is like 16%, 3 months bill. So then if I'm sitting on a board of a bank, or whoever makes the decisions in the bank, and I am trying to consider whether to give a local person the money or put it in bills, my obvious decision will be the bills. So what does that do to me? It obviously rips off my liquidity, meaning that I don't have cash at hand. And if I'm running a business, cash is king. Like you may have assets worth from here to the moon, hard core assets, okay? But if you are cash strapped, the business may fail. So cash is king. So, but I'm not able to get this cash because the bank is not giving me a loan. It's put not all, most of its money on bills, and it thinks I'm a high risk investment, or rather a receiver for a loan. So it will either give me very limited with very stringent conditions, or not give me at all, and puts the money in the bills, gets its yield back. So the thing is, so the government has borrowed from the bank. How does the government pay? I have to pay taxes for the government to pay. So what does that do? Inflationary pressures that are driven by government spending. So it's full cycle.
It's a full cycle.
So who suffers the most? I suffer because I'm overtaxed to pay this debt that the bank benefits, because the bank has to be paid. And the 3 months, 6 months, 5 years, if it was a bill for 3 months, the moment it clocks, the bank has to get its money back with interest, okay? So I have to pay taxes. If the government feels pressure that it doesn't have enough cash, I have to pay more in pay or in affordable housing levy or whatever, okay? Or in all that, so that the government can have cash. So, but instead of government capping its spending so that it does not have a big deficit, so that it does not borrow so much, both locally and internationally. So it goes back there. You cap spending, so you don't have a big deficit. You do not have to borrow so much. Then the bank will realize, oh, the government is not borrowing so much. Let me offer Monica my loan, by the way. She can repay pole pole at 18%, at whatever interest rate. So obviously, government borrowing is affecting my accessibility
To loans.
because now I become second tier client, no longer first tier client. Government is first tier client.
At least for the first time, we have someone to blame, and it's the government.
yeah.
And now, over the past week, the CBK has been pushing banks to lower their lending rates. I understand that these are problems that the government has created on itself, because of there's so much borrowing. At the moment, the domestic debt is at 5.4 trillion, and the overall debt of the country is, I think, 10.6 trillion, which is 70% of our GDP. That is quite interesting. So do you think them pushing for banks to lower their lending rates, interest rates, do you think it's something that is going to help push for entrepreneurship in the country?
Yeah, it will reduce the cost of capital. Cost of capital will reduce definitely. So I'll pay less in interest rates, which is good for me. At least a tiny bit is good for me. So the better way, I think, would be to incentivize banks to actually look for, because right now the government is kind of broke, okay? Does not have money to inject into the economy to spur up economic growth, okay? Because there's a time when, essentially from macroeconomic theory, when the government spends, there's like a multiplier effect, and that should spur up the economy. But we are not seeing that very much right now. So because the government has limited capacity to do that right now, because it has its own cash issues with barely able to meet bills and barely able to meet loans, what I'd do if I was in treasury is, then my second best option would be banks, because banks are the ones that have, I think, a bit of, not banks, I mean finance institutions, let us call them finance institutions. That is banks, SACCOs, microfinance, all those. So I would incentivize them to disburse capital. It can be a tax incentive. You just tell them, if you hit these levels of disbursing loans to normal consumers and businesses, or you can get this type of tax incentive. And that will be a good way, because now banks will like move to the market, will create new products for the market, will innovate. They can work around the economic weaknesses. They can. They have the muscle to do that. You just need to give them good incentive, and you can start from a tax incentive. You can offer them a lower corporate rate, income tax rate, for achieving a certain level of. So because right now you're not able to spur up the money to go so that I can trade. So because when I trade, I multiply. So overall GDP multiplies. But if I don't trade and you don't trade, some other person does not trade, we are all stuck, right? So but we need the cash to move out, so that I can make products, I can do whatever it is that I need to do, and so that somebody else's buying capacity can be increased, so that they can buy from me. So as I grow, obviously my business creates more space for employment. It's like killing 10 birds with one stone, because if I trade, I grow, I employ person B, so there's one less person complaining about unemployment. So
very interesting. So in Kenya currently, there is the gap between the micro businesses and the businesses at the top. That gap is like increasing.
Really big,
So what do you think the government should do? Because I understand for an economy to grow, the small, micro and medium enterprises industry need to be more active, because that is where most people are employed, or most people get their disposable income and everything that allows liquidity. So what recommendations would you give the government to reduce that gap?
Again, it will go back to, blue chip companies have muscle by themselves. They don't need so much of government intervention. they have muscle to move around. They can negotiate for their own capital, you know, both internally and even internationally. Yeah, they have the capital, but small and medium price, they do not have that muscle. So the best way, okay, government tried in this through, say, Uwezo, Fuliza, not Fuliza, sorry, what was its name? The government, the one that was big, okay.
Uwezo Fund, and the name is gone.
Yeah, the name is gone. But anyway, so it tried, but it's not efficient. Again, I don't know why government projects lack in efficiency. We do not see the desired results despite the disbursement. But then again, there's a level of corruption there. So again, go back to the institutions that are in charge of money and have a say to them. Again, I'd go back to incentivizing financial institutions, because those ones are the only ones that have the capacity and they can reach SMEs. They know these SMEs. Each SME has a bank account somewhere. At least most, 99%, they have a bank somewhere. And if they do not have a bank somewhere, they have a pay bill or a till number. So you can use that channel. So you incentivize the providers of capital to actually provide these guys capital so that they can be able to run their business. Again, creating a good business environment, a general macroeconomic good business environment really helps with the SMEs. Again, simplifying tax procedures, because the more you make it complicated for SMEs, the more they won't pay. They will find ways to dodge. You will be surprised. So the best way is to simplify your tax procedures. Simplify it. Make it, if you're paying income tax, this. If it's VAT, this. If it's don't have a million procedures, a million, it's just over-regulated with tax. Okay, make it simple so that the mama mboga. I'm actually for the idea we should all pay tax 100%, even the mama mboga. Just be equitable in the sense of fairness and justice. So if you are saying 1%, if she made a turnover of 100 shillings in a day, let her be able to pay the 1 bob. Make it that easy. The way I can buy credit here 5 bob. Make it that easy. If we have a SSD code that can enable me to buy credit worth 5 shillings, we should have an SSD code that can the mama mboga should know. Just dial star da da da. Easy short code. Easy, like the way everybody knows star 100 hash. The same way, or star 544 hash. Everybody with a phone knows that. Same, very easy short code. You just put in revenue for the day 100. It just does the auto calculations for you. 1% is 1 shilling.
You pay.
Auto, it prompts the payment. Yeah, so easy, because that's the only way you reach the informal sector, by the way. Easy, direct, straightforward. Don't give me 10 sets of rules. I won't be able to keep up with that. I'll just shun you, and each time I see you coming, I'll take the other corner. So that's the best way to expand tax base, so that even you're able to collect more, so that you're not cash stricken, so that government can have funds. Because right now, the truth is the employed guys are paying a lot more. Yeah, the informal sector is generating also a significant, like really big amount, but the informal sector does not pay tax. Only a few rather. So but the tax laws again are not favorable for them. So if we can be able to simplify it so that the government can have its cash, and also incentivize the financial institutions so that there can be a lot of cash, and so that you can get people to be able to produce. Both SMEs, if they're able to produce a trade, they can grow all by themselves. They'll grow in leaps, and you'll see it in the GDP. You'll see it now in per capita. Yeah.
Interesting. I know it could be easy it will be so voluntary for everyone to pay tax if we could be seeing results, you know.
There's also like a major thing. Yeah.
Now, there's something that our viewer has been waiting for. All these things we are talking about, what government should do may not concern that campus guy who left school and wants to venture in business. Now, take us through the equity funding, the stages, the pre-seed, seed, and how this, through these levels, they can get funding.
Okay. So if you're starting up and you're interested in VC capital, so first identify where they are, okay? If you're just through a little research online, you'll be able to know where they are, where you can get them, their meetups, so that you can narrow down to your industry and try and find the VC first, even before you go to, you know, pre-seed, seed. Try and have a list of the VC that whose areas of interests are your areas of interest. So that will be the first thing. So just have a list of those who will be interested in funding your project, because they usually have areas of interest, at least most. There are those who go all around, but most of them will have, I'm looking for this industry, that sector, this kind of product. So when you have your information on that, then if you go now to the stages of funding through a VC. So you can have pre-seed. So pre-seed is basically when your business is on ideation level. It's an idea. So you pitch it to different people. At this point, you still do not, you just have to give data that will somehow support that your idea will work. So that is pre-seed, and there are people who listen to those and they are willing to give their money for that. Then we have the seed. Seed is where you have a prototype for your product or service, and you can be able to show how your product is working, what the workability, and at that point you might have sales here, there, but you may not, it's okay if you do not have too much traction in sales at the level of seed. But at the seed level, you must have a product and you actually present it and say, hi, this is my mic, and I'm selling it for this. I had an idea of a mic, now I'm presenting the mic. And then you go to Series A. So Series A is when you've had some sales. It's been a few months or a year, you've had some sales. You're able to see your top lines and your bottom lines. You're able to give a very, before you were relying on forecasts of my operational expenses, before it was forecasting. Now I'm giving you actual data of I have sold 1,000 pieces. It cost me this much. So I'm giving you actual data of how my business performed, and on the basis of that you can get funding in the Series A stage. Series B is your business is a lot older, and you're planning to scale up in the region, okay, or in another country, in another market. So you might need extra investment for more assets to build capacity to scale up to another region, another market. So if I was in Kenya, operating in Kenya, I'd say I can try the South African market, but I need resources to tap into the South African market. So on the basis of that, you can look for funds from VCs. And then Series C is when you want to go for an IPO, that is like super advanced. When you want now your business to go into trading your shares, you want it to go public, you need funds for that. And you can also use that for, VCs can also fund that. So yeah, so most businesses go up to Series B because not really go to IPO.
You can manage yourself.
Yeah, most don't go to IPO unless they really grow. Yeah.
Interesting.
Yeah.
Now our time, muda umetupa kisogo, acha nitumie Kiswahili.
Okay.
Muda umetupa kisogo. Now in less than a minute, Please give us a parting shot.
I will tell the entrepreneurs and those who are starting up and those who are running a business. I've learned a lot from my mentors as well. You just need to keep the wheel moving. Don't stop. And if you get a no, just find out why you got a no and improve. I believe in continuous improvement. Improve. Do your research. Work hard, okay? If you're running a business, do your best. Make sure that you get your revenues up there. Do your best to make sure your costs are cut as much as possible. If there's any government official probably listening, I'd say maybe this time as we are budgeting, have Kenyans more at heart. Yeah. Let's not go the normal, usual way of just getting figures and, budget deficits and the guys demonstrating. At least let's show that, hey, we have really tried. We've cut here, here, here. And not the bulk cutting. It has to be specific. Specific cutting. Because I remember during the last Finance Bill 2024, I remember after the demonstrations, the issues of we've cut the budget by, and then a bulk figure was given. That doesn't work ever. You have to find specific areas to cut that it culminates. So that's what I'd say. That is,
I hope it has gotten to the hearts of, you said politicians.
Anyone who is in charge of
those sitting on decision-making tables. I hope this time you have Kenyans' hearts or Kenyans' welfare at heart. Now, that is the discussion. Let me read a few feedback before we go for the break. We have Amara Kevin. He says, I'm glad to see you on my screen, Monica, and I wish you all the best.
Thank you.
And also we have Muriru Samuel says, new trends in the marketplace is facing out indigenous business ideas. The government should step up and encourage seed funding to startups that are trying to level up to these new market trends. Thank you so much, Monica, for making time for us this morning.
Thank you.
And to our viewers back at home, stay with us because after this break, we are having newspaper review.